At BlueOrchard, we believe engagement is fundamental to impact investing, if not one of its most important components. By working closely with our portfolio companies, we promote stronger sustainability practices, strengthen governance, and ultimately maximize the impact our investments are there to achieve, reflecting the contribution we can give as an investor. Over the years, our engagement experience across our portfolios has identified a few key elements of how engagement works best in practice. First, engagement is defined and prioritized based on each fund's impact objectives, as well as BlueOrchard's priorities and experience in driving effective outcomes. Our engagements can be aimed at improving sustainability practices, such as governance, transparency, or climate risks, or at supporting specific impact objectives, for example, by strengthening or launching products focused on women or climate. Engagement is then embedded within the investment process, from due diligence to ongoing monitoring and dialogue with portfolio companies, where we set clear expectations really early on. Second, while our engagement approach follows the same structure and rigor across strategies, its implementation and our level of influence vary depending on the asset class and on our position as an investor. In private markets, engagement often begins during due diligence process, where we assess sustainability and impact practices and identify potential gaps. This can lead to commitments that are formalized in the contractual investment documents, such as loan agreements or side letters. In private equity, we typically have greater leverage, for example, through board participation and close dialogue with management teams. In listed markets, engagement typically takes the form of a structured dialogue with issuers, where we seek to improve transparency, sustainability practices, and disclosure over time. Now, third, engagement is rarely a one-off interaction. Meaningful change takes time and often requires repeated dialogue and follow-up. In practice, we engage several times with the same institution as we track progress on specific actions and follow up on commitments we have previously agreed. For example, through regular calls with structured reviews to assess the implementation and discuss next steps. Finally, our experience shows that our influence should not be underestimated. Even in cases with lower leverage, targeted engagements can drive meaningful change through constructive dialogue with our portfolio companies. And this contribution to impact is what differentiates us as impact investors.
In listed debt, engagement typically focuses on strengthening issuers' labeled bond frameworks and reporting, while also addressing material sustainability risks and climate strategy that may affect long-term credit quality. We base our approach on our own sustainability impact analysis to guide the most important engagement topics with issuers. Engagement is not only a channel to request information and encourage change. It is also an opportunity to share knowledge and best practices, acting as an enabler of that change. A good example is our recent engagement with Muangthai Capital, the largest Thai non-bank financial institution, which focuses on providing small loans to micro-entrepreneurs and consumers. The engagement focused on its social bond framework and reporting. During the discussion, we asked for clarification on the social bonds target population, as the initial framework disclosure did not fully specify the intended beneficiaries. In response, the company provided a satisfactory explanation and confirmed that the proceeds of the bonds will be directed towards clearly defined underserved populations, such as underbanked customers and women entrepreneurs. This improved clarity, and we also asked for the target population to be reflected in the upcoming impact report, which the company subsequently did. As it is often the case in engagement meetings, we also take the opportunity to address material sustainability issues with the issuer. This is to understand where they stand and to stress the importance of these topics for investors. We focus in particular on client protection, which we consider as highly material given Muangthai's large retail customer base. We emphasized expectations around responsible lending practices, and the company shared that it is continuing to improve its client protection programs. Additionally, we discussed climate strategy and targets. Muangthai noted that it is currently calculating its baseline and intends to set targets afterwards, viewing climate as a material issue. Finance emissions target remain at an early stage due to measurement challenges, but we shared market best practices and examples from other financial institutions, including the use of proxies and commonly applied tools.